this money. You know that for the first time in world history, every central bank in the world is printing huge amounts of money. This has never happened, but it's always led to higher prices.
Angela Merkel should run the Federal Reserve.
Absolutely, absolutely.
She gave the greatest riff and rant I've ever seen from an elected head of state in the history of the earth. She actually said central banks should stop printing money. I've never heard a politician say this before, the German chancellor. But, Howard, let me just ask you, on the commercial real estate thing, which is a fair point, okay, I'm sure that there's toxic assets there, but doesn't economic recovery solve that problem? I mean, when you look at the spreads in that market, they've come way in. When you look at the insurance options, the CDX is written against that stuff. On the market indexes, they've all come down very nicely.
You know what? You cannot. You used to be able to finance a building at a 4% expected return, a 4% cap rate. Right? Now they're all 8 and 9% expected cap rates. You go to refinance a building, you are going to do it at half the value of the current outstanding loan. Good tenants paying their bill, right? Paying their lease. But I tell you what, you finance it at $500 million, like the Pearson building that Harry Macklow had at auction.
Right,
you finance it up here, and now you can only finance it down here. When that goes ripping across America, the numbers that are not in banks' numbers right now are going to be huge. And then you level on top of that in 2012, all those leveraged buyout deals from 06.
Well,
think of every private equity deal in 06.
So what you're saying?
It's going to constrain.
If I adopt your point of view, I'm not sure I'm quite so bearish, but let's say you're right. You probably know more about it than I do. That just means the Fed's going to keep pumping more. They'll probably wind up buying commercial mortgages. And I want to ask Jimmy Rogers about it, which is a key point here. Look at, when I listened to Bernanke yesterday, I don't know what you heard, but is he an independent central banker, Jimmy? I'm getting real worried about that. He's buying up treasuries. He's buying up mortgage-backed securities. He's buying up asset-backed securities. Is he really an independent guy?
And you know what? Before you answer that, Jimmy, I know, Howard, I hear you have to go. I know you have other commitments, so we're going to let you go. But thanks a lot. It was a lot of fun. And please come back and join us again soon, okay? Okay.
Thanks, guys.
Good luck, Howard.
And Bill Griffith wants to ask you a question, too, and then you can answer Larry's question.
No, go for it.
Go ahead, Bill. Go ahead.
I want to hear the answer to this question first before I bust your chops.
Okay, but Bill, we're having a reunion, so you might as well get into all this. All right, Larry, Mr. Bernanke, Professor Bernanke, he's a Princeton professor. You have a Princeton degree. Maybe that's what happened to you all those years. He
was one of only 3 non-socialists on the Princeton Department of Economics, and I have a respect for him, and I know he wants to do the right thing. But, Jimmy, I am very worried that he has lost his independence and the Fed is doing things it shouldn't be doing.
Of course it is. First of all, he's in over his head. He doesn't know what he's doing. The poor man is out of his league.
No, he's a bright man.
Come on. He's an Ivy League professor.
Out of his league?
Well, I understand. But
I think he's out of his league.
In that milieu, you mean you went to Yale. In that milieu.
Wait a second. Let's give him a little credit for his innovation, for thinking outside of the box.
We're not in collapse, okay? We have cauterized the wound and we're doing okay. We're starting
the worst economic crisis, arguably, that this world has seen since the Great Depression.
And he bungled it totally, Sue. He bailed out all of his friends.
The financial markets are still here.
They would still be here. We've been having financial crisis for a few hundred years. And the world has survived.
Hold this thought. Everybody stay right here.
The ship will come in, I'm sure.
You think it's now, though?
And you think it's now in cotton. You're interested in cotton because of an energy play?
Bill, commodities have been the best place to be for the past 10 or 11 years. Stocks are down over the past 10, 11 years. Commodities are up. Commodities have almost doubled in that period of time. So commodities have been the place to be, and they continue to be.
So isn't it time to sell them then? Remember, Jim, let me see now. Let me see, remember if I got this right from you. Buy low.
You got it.
Sell high. It's not high yet?
Listen, even Larry has learned, Bill, so I'm delighted to see that both of you
Part of that is, it's not just inflationary money. You've got the spread of world capitalism to these emerging markets that are producing now, and some of them themselves are commodity producers, but others are commodity consumers. So this is part of the capitalist world economic growth explosion, which is a good thing, not a bad thing.
Don't we have a deflationary period we have to go through before we hit the inflation?
No, Bill, no, they're printing so much money. This has never been done. Maybe there's going to be deflation, but if there is, it's going to be for a short period of time.
Didn't we have it? I mean, if you look at a commodity chart, you had this extraordinary boom, but then roughly from, I'm going to say, the middle of last year to recently, you had a bust.
No, wait, hold on. You had 5 months. You had 5 months when commodities went down because there was forced liquidation. AIG went broke, huge in commodities. Lehman went broke, huge in commodities.
But does it matter what the trigger was?
Oh, but fine, they went down for 5. In 1987, stocks went down 40 to 80% around the world. Was it the end of the bull market in stocks? Anybody who sold in 87 lost a lot of money because stocks then went up 1,000%. So there was forced liquidation in 1987 for absurd reasons. But that was not the end of the bull market, any more than this forced liquidation is the end of this bull market.
So those highs last year were fundamentals. It wasn't a commodity bubble. Those were fundamentals?
It was not a commodity bubble. Those highs will be taken out again during the course of this bull market, just as the highs were taken out in 1980.
But I can't
$150 oil.
But the Rogers...
$150 oil is going to be cheap before this is over.
But the Rogers Commodity Index, I follow it every other week in Jimmy Grant's newsletter. You're still way below the peaks now. You're just
of course
way
we are.
below
But
the peaks.
so is that. But Larry, listen to my point. In 1987, everything collapsed. They closed some stock exchanges.
Right.
Things were so bad.
Came back.
But it was not the end of the bull market.
So why can't we come back? Let's go to that topic.
Well, can we do it on the other side of the break?
I always want to come back. You know, the liberals are running Washington now. That happens every now and then. The voters lose their mind. But the liberals won't run Washington forever. They won't run Washington forever. We're still a free market conservative country. People in this country still believe in the profit.
Larry,
this is what I love.
The government owns
This is what I love. Two of my best friends.
I mean, Obama
who never changed.
Obama
is still haranguing on the liberals.
The dumbest thing I've ever heard.
Kudlow is still haranguing on the liberals.
Making these little green goats.
Let's talk more about commodities, currencies. We're adding Rick Santelli to the CME Group, from the CME Group in Chicago to the conversation. Jimmy Rogers is our power player. Larry Kudlow's here. We've been talking commodities, Rick, but the other issue is currency. You know, and I know, of course, you follow the dollar very closely for us, but we've been talking about this concept of a reserve currency, and Jimmy says he doesn't think it'll ever happen.
Well, I totally agree with Jimmy. I don't think it will ever happen. And I agree with to some extent with Mr. Ludnick that they don't have any alternatives. But I will go back to the following. I think Jimmy said it as well. How much they buy in the future really is all that should matter. You don't even need to think much about what's happened in the past. And think about the yield curve. You know, everybody's talking about these high interest rates and what do they mean?
Here comes the sign.
You know, here's your yield curve. The more it steepens, the more the Chinese are sliding down into the short maturities. You don't want to be on the long end of the diving board beyond 7-year, you know, with these deficits that are being spent. And Jimmy, you know what the day it was that we reached the high yield on a 10-year? I'll never forget it. I believe it was September 30th, 1981. The 10-year yield reached 1580.
Right.
But the neat thing is the 2-year at the time was at 1670.
I remember it very well, Rick. I didn't know you were that old. But you know, you're exactly right about the Chinese. What they're doing is they're coming to the short end because they don't want to get trapped in long bonds. If something does happen to the dollar,
That's
which
right.
I expect, and they expect, and other people expect, they don't want to get stuck. If they're sitting there with 30-year bonds, they're dead.
But
That's
you know,
right.
But Rick, let me make this point. The thing that really troubled me about Ben Bernanke yesterday, and I do think he's a capable man, but I think one reason the dollar has been shaky is that I think the rest of the world, including China, maybe most especially China, is asking a tough question about the Federal Reserve's independence, Rick. I think that's a big issue.
Oh, I agree. That's a huge variable. I totally agree.
The hyper-activism of the Fed, making all these purchases in the open market, not only does it pump unnecessary new liquidity in, because I think we have enough up to now, but they're saying, you know, who's really running the store? Go back to what Angela Merkel said yesterday, the day before. She's the only politician I've ever heard who said central banks should not be so loose.
And Larry,
You know what,
isn't it amazing that somebody of that stature at that peak is making these comments because it's taken a long time to get to that level?
And
Well, Rick, you and Larry both happen to be right. The Federal Reserve is no longer an independent
Well, I
entity.
think they've lost some of it. I really do. I think
some of it. They've lost it all.
Scott has an interesting point.
Give Bernanke the benefit of the doubt that he's going to do his job and is going to try and be independent. It doesn't matter. Unless you think that he's absolutely the most brilliant person in the world and Congress is all of a sudden going to gain all sorts of discipline, how are we going to eat up all of this debt?
Because
All right, hold the thought.
Money printing is the absolute worst thing to do.
That's
Is
what
that
I
why
say.
Jimmy's long cotton? There's a lot of cotton in a dollar bill.
Inflation
I know.
destroyed
Back
this
in a
country in
minute.
the 70s, and we do not want it to happen again. Never, never, never. I lived
Break.
through